In this week's episode of the Stockscores Market Minutes, we'll take a look at the stock market crash, what has happened so far, and what is likely to happen next. I'll do my regular weekly market analysis. We'll do a market scan in search of opportunities created by this market crash, and then I'll look at the day trade of the week on BIOC. All right, welcome. So we have obviously had a major market correction in the past week. It started actually a few weeks ago, and then we had a bounce back. And then basically Friday of last week, it started to roll over again, and we got a real acceleration to the downside. You don't probably need me to tell you that. One of the reasons you're watching is you're wondering what the heck is going to happen next. And I'm going to try to answer that. But let's just summarize what's happened so far. The market was really overdue for profit taking, given that we have the market really going straight up since early in October. But the coronavirus was the catalyst for that sell-off. It brought in a little bit of panic. Well, I shouldn't say a little bit of panic. Best to call it a lot of panic. And that weekly upward trend line that I've been talking about week after week has been broken. However, it is not from a falling top. And I'll show you the chart in a moment to explain what we're looking at here. Right now, the market is really quite oversold. And by oversold, I mean it's just gone down too far, too fast. And that makes it likely, just from an emotional standpoint, likely to bounce back. And therefore, I think we're going to see some stability next week, at least early in the week. But I will be concerned if we ultimately make a breakdown from a falling top. And again, I'll show you this on a chart in a moment. That hasn't happened yet. The weakness comes off of the market making new highs. And it's very rare that long-term downward trends start from a breakdown from a new high. It typically has to have a falling top first. And one thing that we can be pretty sure of is that the volatility is going to continue because there's a lot of uncertainty in the market around this virus. So let's take a look at the chart of the S&P 500. And we have the upward trend line that I've talked about many times. And you can draw this a few different ways. That's sort of the more conservative way, then you have that way. Either way, we have clearly broken that. But notice it comes from the market making a new high. Volume very significant, that demonstrates real panic in the market. However, what we're looking at now, and really what's important is what's going to happen next, is the market has fallen into this support zone. You see this lengthy sideways trading? That's going to be a good base for the market going into next week. And so although I think there's going to be lots of volatility, that's one of the reasons I think the market will bounce back next week. Now, let's take a look at our normal market analysis and just dive into the S&P chart on a 30-day, 60-minute basis. And you can see the real sharp downward trend, and I can draw a downward trend line that looks something like that. What's encouraging is that on Friday, the market opened gap down. You can see the gap from Thursday to Friday, but managed to close up above its open through the day. Now, it was still down for the day, but it closed above its open pretty much at the highs of the day on Friday with accelerating volume. And so you can see that it was probably a flush of the sellers on Friday morning, people panic selling on Friday morning, and that is typically the sign of a short-term bottom. Now, what I would like to see on this chart is a break of this downward trend line that's building right here, and do so from a rising bottom. So we've actually got a rising bottom. We have our low that was set Friday morning, and then a little rising bottom on this first pullback. And so we've got all of the makings for a bounce back. We just need to break this downward trend line. And so that is what short-term traders should watch next week. Now, if we look at the longer-term daily chart, we see more signals of why the market is likely to bounce back early next week. Here's the upward trend line on the daily that was broken. You can see we really started on Friday, but it accelerated Monday, Tuesday, Wednesday, Thursday, Friday of this past week. But on Friday, notice that this candle is green. What that means is that we closed above the open. So the market opened here, it went all the way down to there, and then it closed just above 295, right around 296.30 on the SPY. And volume really accelerated through the day into Friday or over the last week. And that's again a sign of capitulation. We had that panic selling at the open on Friday, and that's often a sign of a bounce. Also, remember that we've got this lengthy trading range here. Lots of people own U.S. stocks at these prices, and therefore it's going to be a floor for the overall market to bounce off of. Now, let's take a look at the Russell 2000, which is the US small caps. And you can see also a big downward move, but also coming into support where markets tend to bounce. Although I think that the market's likely to bounce, that does not mean that I think the selling is necessarily over. I think it may bounce for a few days and then may retest the lows. We don't know that yet. We'll judge that as we come, and I'll keep you updated each week here. And I would remind you, it's a good time to subscribe to the channel. Click on that little notifications bell in YouTube so that when I upload a new video, you will get an instant email alert to say, hey, Tyler's put up a new video, and you can see what my thoughts are on how this correction is unfolding. So anyway, back to this chart. We have the support that's hit it a number of times. We're at that again. Another powerful reason for the market to bounce back short term. On to the Canadian market, and again, you see that really parabolic, precipitous decline lower. Strong volume on Friday. That again, a sign of capitulation. Another signal that the Canadian market also is likely to bounce next week. Looking at that longer term chart of the Canadian market, there it is. Good support. Hit it once, hit it twice, hit it again Friday morning, bounced off of it. A good sign that we will hold that support zone next week. Into the TSX Venture, which is those small cap stocks, a lot of mining stocks, a lot of cannabis stocks, a few oil stocks. Of course, the commodity-based sector really suffered, and that's why we see a big drop here. I think this is overdone. I think we'll see a bounce back there as well, short term. On to currencies. US dollar had a bit of weakness. I talked about this last week, the market rallying into resistance. It got stuck, it rolled over, but that does not mean that we're necessarily breaking down. However, I think that given that the upward trend line, which we can draw sort of like that, was broken here, that was about 2.5 months ago. We've come back up, built that falling top. All right, so falling top, and now we're rolling over. I would again be pretty cautious with the US dollar because I think it can retest these lows in the near term. Canadian dollar suffered this week. Again, it's closely correlated to commodity prices, particularly oil. Oil really got beat up this week, and that's one of the reasons we see that sharp downward move. That breaks this upward trend line. Kind of broke it a few weeks ago, but not decisively. However, there's still strong support here, strong support here. I think the Canadian market's just going to grind sideways near term unless we get another wave of selling to the downside in oil. On to interest rates. The bond market rallied this week, which meant interest rates going lower. Why does the bond market rally? Well, the fear is there will be a global economic slowdown. That means central banks have to provide stimulus for the economy. That means lower interest rates or more printing of money, and that makes the bond market go up. Quick lesson on how all of these things work. Of course, we broke the pullback here. That was the buy signal for the bond market. We're getting a little bit emotional right now. We're far above that trend line. You can see the distance there from the trend line. That indicates emotion. Typically, when you see runaways from the trend line, like you had here, then you get a pullback to the trend line. Like you had here, you got to pull back to the trend line. So we're running away a little bit again. I think we're due for a little bit of a pullback in the bond market, and that will probably come if the stock market is able to bounce next week. On to commodities, and this is a peculiar chart. This is the chart of gold, and really gold is often a hedge against market weakness, and we saw gold really pull back before the market started to reverse and show some strength on Friday. Now, gold was weak on Friday. I can't explain why. The bond market still went up higher. It's not like it's a vote that there won't be easing by central banks. So, yeah, something peculiar going on in gold. I can't quite explain it. What I can say, however, is this is something called a bearish engulfing candle. The high for the week is higher than the previous week, and the low for the week is lower than the previous week, and we close red. So this red candle is engulfing the previous week's candle, and that is a negative signal, very strong volume, and therefore I think gold may see more weakness, and you want to be cautious with those gold names. Now the upward trend line, which I draw very quickly here, hasn't been broken yet, so we may pull back to that 145 level on GLD and bounce, but I'd be cautious with gold. There may be some profit taking happening right now. And then we have the oil chart. Of course, a dismal week for oil, but look at it has support here, and let's see if that can hold next week. It started to bounce back a little bit on Friday, and I think there may be an opportunity to get some bargains in the oil market. And finally, the fear chart. The VXX, of course, goes up when there's fear and panic in the market, and it is a great hedge against market weakness. We rallied, we gapped up on the open and then closed below the open. This is something I call a bursting bubble pattern. When you get that red candle, which means you closed below the open with strong volume, we often see a pullback. So I think fear may come down to start next week, and therefore another supporting signal for the stock market to bounce. When I say bounce in the stock market, I want to be clear. I don't believe that we're necessarily out of the woods yet. I'm just talking about the next few days. We probably see stocks bounce back, but we could get another wave of selling. And again, if you want to keep updated on what I'm doing, subscribe to the channel, hit the notifications button, click on that like button because that means this video gets more views. I want lots of people to know about what's going on in the market right now. All right, so my outlook then, I am neutral on US stocks given that they are at support and should bounce. However, short-term trend is still bearish, and until that short-term trend is broken, we shouldn't get overly optimistic. Canadian stocks, same rating. Gold, I'm neutral on both time frames, and oil, I am neutral on both time frames as well. The market has been infected by the coronavirus, and that has sent stocks sharply lower on fear and uncertainty. I will say that I think the selling is likely overdone in the short term. It's been pretty emotional, and therefore we should get a bounce back next week. Volatility is likely to continue, and we could see another round of selling eventually, so don't take your eyes off of the ball. Keep watching these weekly videos. I may do intra-week updates if there's something important, and we'll just try my best to keep you updated on that. And as I said, fear is high, but it is looking like it may come down in the short term. All right, now I'd like to do a Stockscores market scan, and this week we're going to build a scan. Normally we go into the market scan and we use one of the preset scans, which allows us to, select scans that I've set up for you and look for things like abnormal behavior and that kind of thing with the different scans we do. All of the filters in the market scan tool can be combined to make your own scan, and because we have a kind of a unique market condition right now, I'm going to build a scan that looks for stocks that are heavily oversold and looking like they're going to bounce. And I call these dead cat bounces. I do them very rarely. You have to have a market panic to do this. But what I like to look for are stocks that have sold off sharply, have managed to close above their open. We call that a bullish candle, and are maybe near some support. So when we look at a chart, we like to see whether there's some support there. So I'm going to jump over to the market scan tool, and I've built this scan already. And I'm just going to highlight what I've set the settings to. You can see that we have all these filters here. So the first one I've activated is the gain loss filter, and I've set that to less than minus 10% over the last 10 days. In other words, minus 11, minus 12, minus 13, anything smaller than minus 10 will get picked up for the loss. And we cycle down here a little more. You'll see that I've also set the number of trades filter to 25,000. That's very liquid stocks. I want to focus on liquid names for this. If you wanted to run this scan just on the Canadian market, I would lower that to maybe something like 2,500. But I'm going to run this on the US and Canada, and we'll keep it at 25,000. And a few other things here in the momentum study calculations. I'm setting my stochastics to oversold, my RSI to oversold, my short-term trend and medium-term trend to bearish, but my long-term trend to bullish. So that longer-term trend is still up. We're just looking for stocks that have suffered very quick, sharp pullbacks that really hasn't broken their trend yet, but is probably a little oversold on emotion. All right, so I'm going to click on the market scan button here, and we'll get a quick idea of how many stocks were found. You can see that there were 66. We now have to inspect those charts to see which ones have the kind of patterns I want to see. Now, I'm not going to pick all of them out. I will look at some large charts, and I'll stop at the ones that I like. So the first one that I like is this, Transocean, RIG, R-I-G, again in the oil sector, which really has been decimated in recent months. Whoops. And what we're going to do here is highlight this bullish candle. That is the green candle. The market closed above its open. It's heavily oversold. We've gone from $7 to $3 in 2 months, less than 2 months. And I just think it's likely to bounce back as a trade. I don't think it's going to get back up here. I'm happy if it comes back up into here. But a move from where it is today, just under 3.5 to 4.5, 25% move. I'm just calculating that quickly in my head, but it's a significant move that you can probably see on an emotional bounce back. And so that's kind of what I'm looking for. I want to see stocks that make a really strong signal that they've bottomed out on emotion. So notice here the volume on Sirius XM Holdings. It closed above its open, good volume, really heavy volume. After breaking the upward trend line, it probably can bounce back and come up into that 680, 690 zone if we do get an overall market bounce. Continuing along, we're not going to go through all 66, but I'll show a few. Here's another oil name, and again, that bullish candle, heavily oversold, parabolic to the downside. Maybe it comes up into this range, into the $11 range, which was its old trading range. I think that's a reasonable expectation. So for those of you that are members of Stockscores, you can build this scan yourself. I've shown you the settings. For those that aren't members of Stockscores, well, then you need to be a member, and you can go to the trader training area of the website, look under products and services, and learn more about how to become a member. I also write a free weekly newsletter, and I'm going to give some of my stock picks when I send out my weekly newsletter on Monday, and that's free. Just go to the Stockscores website. I think it's under Stockscores Analysis. There it is, free weekly newsletter. You can subscribe to that right there. All right, let's continue with our day trade of the week. It has been a crazy week for day trading. Awesome profit potential this past week. We've had so many big movers, long and short. We had a lot of coronavirus stocks that made big gains during the day. And then we had lots of shorts, obviously, where it was just such a volatile week. It was awesome for day trading. So this particular trade came from Friday. It was the top performing long trade that my system picked up on. And the entry signal came right there on the action candle at, I believe it was 10:28, I believe. Can't remember the exact time, but you see the little pink dot there. That's our action candle indicator. For $100 of risk, required a position of just under 5,000 shares. That was $1,690 of capital required. You can't margin the stock because it was under $3. However, made a huge gain, 20.5 RR at the close. And when I say RR, that is reward for risk. It earned 20.5 times its risk, which meant for every $100 of risk, the profit was $2,050. That is a 121% return on your money for a one-day hold. And I would say that that's pretty good. Well, I hope that you've enjoyed this week's Stockscores Market Minutes. Again, subscribe, like, tell your friends, leave a comment, and most importantly, trade well.